Should I pay off my mortgage before I retire?
Boy, this is a loaded question too. So this has a lot of variables involved and a lot of factors involved in making this decision. And I would start with, what kind of interest rate do you have on your mortgage? What kind of payment are we looking at? And as far as your income in retirement goes, can you comfortably make that payment with the income that you have? All of those things are factors in it. It's interesting because interest rates were so low for so long that most people were in that 2 to 3% range on a mortgage, which made that question change is most of the time it was not advantageous to go ahead and pay off that mortgage because you have such a low interest loan. We could keep the money invested that you would have paid off that mortgage and do better than the interest we were paying on the mortgage, and you got your mortgage deduction whenever you did your taxes. So, a lot of times that was a pretty fairly easy answer to that question. But what I was saying now is things have got more complicated with interest rates rising. We've got loans in that 6 to 7% range now, which dramatically changes the picture as far as how much interest you're paying and all of those things towards that loan. And you've also now put yourself into a situation where you're not guaranteed to outperform that in the markets if you're a pretty conservative individual in your investments. Even if you're not, there's just no guarantee you're going to beat 6 or 7% a year net of taxes and everything else. It's a little more complicated decision nowadays. I would say that, there's also a psychological element to that. I can't tell you how many people who I've told them, well, look, we've done the analysis and it's really kind of 6 one way, half dozen the other. It's not a huge deal either way. And they say, well, I just would rather pay it off because I sleep better at night knowing I don't have a mortgage. And there is value in that. All those things are things to consider. If you are locked in at a very low interest rate and the payment is easily made and you're still getting some sort of mortgage interest deduction on your taxes for it, I would say you probably just want to keep the mortgage and pay it off normally. And if you are in a much higher interest rate mortgage and you are looking at very different circumstances and payments, you're struggling with it, maybe we make a different call.
Thanks, Stewart. So when I leave my job, what should I do with my 401k?
You shouldn't leave it there.
That segues perfectly to what I was going to say, You shouldn't leave it there. And that's a great starting point. So, and again, another huge misconception. A lot of people think, I just did a rollover call yesterday. And I was on the phone with a woman and she said, but wait, I can't. She was 64 years old. And she said, but if I roll it over to an IRA, I have to pay taxes, right? This is the big misconception. So if you're over the age of 59 and a half and you're still working there, you're able to roll over to an IRA. We call this a rollover, where it's gone from a 401k to an IRA. These are both pre-tax accounts. So it's not a taxable transaction. You're not taking the money out. If you when you retire, you take your 401k and put it in your bank account, you're paying tax on all that. It's all pre-tax money. You never do that, right? So you can go ahead and roll that over to an IRA, which is, again, just a pre-tax account. And what that's going to do is 401ks are typically very limited. They're designed to help people who don't maybe understand or maybe know how these things work, to just give them really simple, easy options, which are great. If you're at your work 401k, you're probably in what we call a target date fund, which is kind of designed to help get safer as you get closer to retirement, which is awesome. And it's a very great concept. But they're typically very limited in nature, where you've got, if you look at your 401k plan today, you probably got anywhere from 10 to 20 options to choose from, different target dates, and then maybe a few S&P funds, which again are fine. And it's a great place to keep deferring money while you're working. But once you hit that magic 59 and a half, if you're still working, you can go ahead and roll that to an IRA. This is typically what we do. And if you're not 59 and a half and you've left employment, say you're in a new job, you've got an old 401k, you can also roll that over to an IRA. A lot of times we'll see people roll that into their new 401k, right? Which again, It's not bad. It's better than leaving it at the old place, but there's better options. Rolling into an IRA is just another form of account, but we can buy anything, right? You can buy any stock, any ETF, any bond. It's basically just an account that can buy anything in the market, but it's pre-tax. So it's a lot more comprehensive. You got a lot more flexibility than a 401k, and you're not going to be so limited.
Yeah, I would frame it like this. So how much help and support did you get, choosing investments in that 401k while you were working? And now you've separated employment from that company. And I want you to put that in perspective. Like, now how much help? I mean, you weren't getting good help while you worked there. Now you've separated employment. Do you think anybody, if the market starts to crash, do you think anybody's calling you from Fidelity or Empower or, whoever's managing that 401k and saying, hey, I think we need to reallocate you? I mean, it's not going to happen. 401ks are a great place to grow money. They are an awful place to get income and distributions from in retirement. Like Mitch said, IRA, get it to an IRA with an advisor who's actively managing that for you, who can, help you and guide you in the right choices that you're making. And even if you're paying a slightly higher fee to that advisor for the guidance that they're giving you, your returns are going to be dramatically better because you're having it actively managed. That, you're still going to come out better having that money in an IRA where you have lots more choices, lots more, flexibility to invest in the things that you want to invest in. We like to say I love to ask the question to people, like, have you abandoned any 401ks anywhere? And they say, what? Like, abandoned? What are you trying to say? And I'm like, because that's honestly what you're doing when you do that. So definitely don't want to leave it behind. Bring that to an advisor or, self-manage if you feel like you're competent enough to do that. But yeah, it's that's a no-brainer.
And one thing I'll add there even is, if you feel like, I can't tell you how many times we've sat with people and we find old 401ks that they've had for, 30, 40,000. They're sitting in some old job. They forget about them. Like, not only do you not get service, they're not going to chase you down and say, hey, did you forget about us? Like, they're just going to leave the money sitting there and just keep collecting a little fee. So if you feel like you might have an old 401k somewhere, come down and, sit down with us. We can actually find it. We've got a lot of software and services today that'll help us track down old 401ks. So if you feel like you might have an old one at a job you left 20 years ago, like, don't leave that to them. Don't let them sit there and manage that, because they're not managing it. It's just sitting on their platform and they're collecting a fee. Come sit down with us. We'll help you find it.